What if I told you that right now, with Bitcoin stuck in the mid-80,000s after touching over 126,000 earlier this year, and the entire market gripped by extreme fear, this could be the greatest wealth-building opportunity of the decade? While everyone else is panicking and selling at a discount, smart money is quietly positioning for the massive 2026 breakout. Welcome to Generational Wealth, your pathway from knowledge to legacy. Today we're breaking down exactly how to build a resilient crypto portfolio that not only survives this volatility, but thrives through it, turning today's fear into tomorrow's legacy. If you're tired of getting wrecked in every correction and ready to stack for the long term, stay locked in. This could change everything for you. Let's quickly look back at 2025 to see why this moment matters so much. Bitcoin exploded higher on the back of huge ETF inflows and institutional buying. But the fourth quarter delivered a harsh wake-up call with tax loss selling, thin holiday trading, leverage washing out, and broader economic worries pulling prices lower. Traditional gold actually shone brighter than Bitcoin in the final stretch, climbing strong, while crypto corrected sharply. Many alternative coins lagged badly, despite major tech upgrades and clearer regulations. Well, the key takeaway is simple: relying too heavily on one asset, whether it's all Bitcoin or jumping into the hottest trends, leaves you exposed when sentiment flips. Diversification spreads that risk across different stories in crypto, from proven store of value to innovative DeFi, AI integrations, and real-world tokenized assets. Looking ahead to 2026, the long-term outlook remains incredibly promising with expectations of fresh Bitcoin highs, potential new ETFs for other major coins, exploding stablecoin use, and real-world assets coming fully on-chain. But we'll probably see more consolidation first. A well-diversified approach sets you up to handle the bumps and capture the full upside when it arrives. Before diving into specific ideas, match everything to your own comfort with risk. If you're more conservative, you prioritize protection and steady growth over big swings. Moderate means finding balance between safety and opportunity. Aggressive investors accept deeper drawdowns for the chance at outsized returns. No matter where you fall, stick to these foundations. Only put in money you can truly afford to leave untouched. Buy steadily over time through dollar-cost averaging, especially in moments like this. Review and adjust your holdings every few months by trimming strong performers and adding to underperformers. Keep some dry powder and stable options for flexibility, and always do your own deep research while considering your personal tax situation. Remember, nothing here is personalized financial or investment advice. Think of crypto assets in layers. The solid blue-chip foundation, with Bitcoin and Ethereum offering relative stability and high liquidity. Growth-oriented Layer 1 and Layer 2 alternatives. Specialized sectors like AI or decentralized infrastructure. Stable holdings for yield and safety. And only small speculative plays if you're comfortable with high risk. Based on today's market trends, here are thoughtful portfolio frameworks inspired by how institutions are allocating. Adapt them to fit you. For a conservative approach focused on lower volatility, anchor heavily in Bitcoin as the digital store of value loved by institutions. Add a solid Ethereum position, park a good portion in stablecoins, or tokenized real-world assets, earning reliable yield around 4 to 5%, and round out with a smaller mix of regulated growth plays like Solana or XRP. A moderate, balanced setup, which feels right for most long-term builders. Starts strong with Bitcoin. Layers in meaningful Ethereum, including some staked for extra yield. Spreads across promising Layer 1 ecosystems like Solana for speed and adoption. Cardano for its research focus. Avalanche for customizable networks. Adds exposure to real-world assets and stables. And touches emerging themes like AI tokens or decentralized physical infrastructure. If you're aggressive and chasing higher potential rewards, lean lighter on Bitcoin, keep Ethereum core. Go heavier into altcoins with strong narratives such as Solana, XRP, thanks to regulatory clarity, Chainlink, or newer scaling solutions. Include dedicated slices for AI, DeFi, and real-world assets. And reserve a small, fun portion for higher risk opportunities like community-driven memes. But only with money you're fully prepared to lose. These balances reflect Bitcoin's current strong dominance, while leaving room for alternatives to lead during recovery phases. Real-world asset tokenization and stable yields are growing fast. setting up for major expansion in 2026 as more traditional finance bridges over. Bitcoin remains the undisputed leader with its fixed supply, ETF momentum, and corporate adoption. Ethereum powers DeFi and staking after recent upgrades, with scaling solutions reducing costs dramatically. Solana tells a powerful comeback story with blazing speed, low fees, and expanding real-world integrations like payments. XRP benefits from legal clarity and surging use in cross-border transfers. Others worth considering include Cardano for its methodical upgrades, its Avalanche for enterprise-friendly chains, and growing real-world assets offering genuine yield from tokenized bonds or treasuries. For extra income, stake Ethereum for around 4 to 6% rewards, or hold stables and tokenized assets safely. Protecting what you build is just as important. Consider setting personal exit points or alerts. Store securely on hardware wallets because true ownership matters. Track everything with reliable apps. Stay patient through rebalancing. And keep learning about regulations, ETF developments, and broader economy shifts like interest rates. 2026 has all the ingredients for something special, but winning comes from discipline and perspective. Buying quality during extreme fear like today often creates the strongest legacies. What does your 2026 portfolio look like? Share your thoughts in the comments. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. If this helped, smash that like button, subscribe, and turn on notifications so you never miss the path to generational wealth. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.